everyone. I'm Vanessa, and Janelle's over here. We're going to be talking to you about understanding your credit report and your score. So let's start with how many of you are currently monitoring your credit score or report? Awesome. Kind of. Great, so we're going to talk about how to do that, what your report is, and the importance of that. And a little introduction on who we are. My name is Vanessa Kavanaugh. I work in our consumer lending department. I work with loans and educating our members on credit, of course. Sometimes it's new borrowers, people who are reestablishing credit, or people that have seasoned credit. Just talking about accomplishing their goals and how credit plays a big part into that. I've been with the credit union for 15 years. I am a huge advocate for education, so thank you for having us here today. We're excited to share this information with you.
Thank you, Vanessa. My name is Janelle Borseth, and I'm the Consumer Lending Manager at Sound Credit Union. I've been with Sound for 26 years now, and I've spent the last 11 years in our lending department. And I, again, just like Vanessa, I'm an advocate for learning. I'm an advocate for sharing our knowledge and what we've learned through our journey with credit and working at a financial institution. So we're excited to be here to kind of share some insights of what credit is, how it affects you, and how it's good for you. So we'd ask you, if you have questions, please, we want to be able to answer those questions during the session and after the session. So don't hesitate to raise your hand. We'd love to hear from you. Thank you.
So for today's agenda, we're going to be going over why is credit important and what's on your credit report, obtaining your credit report, how credit scores are calculated, how to build credit, common credit myths, and tips for using credit cards wisely. How many of you here have credit cards?
How many of you know the importance of making your payment on time on that credit card? Perfect. Love to hear that.
Is anybody familiar with a usage ratio for credit cards? Awesome. That's great to hear. So why is credit important? Well, one of the reasons is landing your dream job. Did you know that when you put in your application, they're looking for information about you? And some fields may even be looking at your credit score. Has anybody experienced that or was aware of that?
One of the things I do when I interview people is I interview people for new positions within our lending team, and I can actually fall in love with one of our applicants and can't wait to get them onboarded to my team. And then as soon as we offer them the position, they go through the onboarding. And part of the onboarding process for our credit union, many other employments out there will pull your credit. And if you don't have a certain score on your credit, you're not eligible for that position you're applying for. And so over the years, we've had to let them know that they're not eligible for the position after we've offered them the job due to their credit. And that's one of the hardest things that I have, because I just got to know them through many interview processes, but yet we are not able to take them. And so again, that's another reason why we're here, is because we want you to know how important your credit is, how to build it, and how to establish it and rebuild all of that in the same.
Yes. That's correct. Yes.
Absolutely.
That is a really good point. Thank you for bringing that up. So when it comes to jobs and fields where there's security clearance or that you would have access to funds, obviously these companies want to protect that and ensure that there's not anything going on that their company is against or that you may pose a risk. Renting or buying your own place. So if you're renting, that might also be a contributing factor. So that would look at, have you established credit? Are you making your regular payments? Having that score would indicate that you are able to establish something and continue to pay in a timely manner to give like a good credit score or not much fluctuation with that. And if you're buying your own home, mortgage lenders will look at all three bureaus, and we'll talk about that a little bit later. But that is a very important factor to take care of that credit, especially for buying your home. And there's a lot of things that go into that. So if that's something that's on the horizon for you, make sure that you are monitoring those things and that you're speaking with your mortgage lender about the do's and don'ts during that application process.
Yeah, that's super important. And we all, when you're out looking for a rental home to rent, maybe with you and your friends, and then you all legally have to apply for it, they're looking at all of your credit scores. So it's not just you, it's who you're actually applying for that rental for at the same time. And a homeowner is going to look at all of their applicants that they have, and then they're going to look at the credit worthiness. And if you have a lower credit score or you have derogatory marks on your credit, they're going to feel that you're going to make late payments or slow payments to them. And quite often they will offer the home to somebody with a higher credit score. So it's super, super important.
You might have things like mortgage insurance as well, too, as a contributing factor, depending on those things as well.
Yes. Getting a loan. We all need credit to get a loan. Now, there are a lot of programs available to establish credit, but in order to get a loan, you have to have credit, or you have to have maybe a qualified co-borrower to assist you in getting that loan. We're going to go over some options here shortly on how to establish credit, establish credit so you can get that loan you need.
So if we're talking about mortgage, we're going to look at a couple of scenarios here for Diego and Angela. So we're going to look at their credit score, the rate that they receive. So as you can see, credit score for Diego is 660. His interest rate is 8.25%. Angela has a little bit higher credit score there, and her interest rate is lower. So you can see how that credit score will drive the rate as well. The down payment, so sometimes if you don't have established credit or your credit score is on the lower end, you might be required to supply more of a down payment. In this scenario, down payments are the same, but that's not going to be the same case for every scenario. Monthly payment. So your monthly payment calculation will have to do with the amount that you're borrowing, your rate, and your term. So as you can see, that monthly payment is higher for Diego than it is for Angela. And then total paid over 30 years. So if you make your minimum payment, all 30 payments, the total cost of that loan is higher for Diego than it is for Angela. So it can cost you more if you're not taking care of that score.
Yes. No, that's a great question, and you should if you can afford that and do that and budget that, you should absolutely do that. Anything above your minimum payment will go to the principal of the loan, so that by the next month when you make that next scheduled monthly payment, you'll be paying less interest because you paid additional funds towards that principal balance. So it's really good. And a lot of times, if you make one extra home payment a year, you can actually reduce your entire loan by 7 years. So it's super important if you are a homeowner to at least one time throughout that year make one additional payment. So that could be every month, split up, or it could be 2 months, or it could just be at the end of the year, you drop in an extra mortgage payment on that loan, and you'll significantly reduce your overall interest rate of that home loan. Yeah, great question.
So as you can see, with a higher credit score, Angela saved over $41,000. That's quite a big feat. Would you say that's a whole car purchase? Pretty great. So what is on your credit report? Let's talk about that. Has anybody viewed their credit report with any of the bureaus? Awesome. So there are 3 credit bureaus: TransUnion, Experian, and Equifax. So you may have access to these bureaus or their scores or different models through your banking apps. Is anybody using a banking app to monitor their scores through any of the bureaus?
Perfect.
Awesome. So a lot of banking or credit card companies will supply this information for you through their apps, or you can download apps for one of the credit bureaus themselves, and you can also request credit reports throughout the year as well. Yes.
Would you say, for example, like I have the Chase app and it's L9 credit report, would you say it's just as accurate as the
That's a great question. So since there's 3 different bureaus, those scoring models look different through all 3 bureaus. And in those bureaus, there's different score models that they use too. So you'll see like a Fair Isaac or Vantage, and that's through Experian. So each lender will choose either one or all that they use for the inquiry and different score models. So let's say you have a 720 with Equifax, you might have a 680 with TransUnion. And the reason for that is because there could be different things reporting, or it could be that they're using different models, or their calculations work a little bit differently with that. So when you're getting into like mortgage, where they're gonna do what's called a tri-poll, it's important to get that credit report information from them previously or prior to applying, so that you kind of know like what you're looking at, and you can kind of compare rates, even with consumer loans too. So if you're applying for a loan, it's really great to ask the lender, what credit bureau do you use to do your inquiries? It will give you kind of an upper hand on what to expect.
Yeah, and a little bit with our financial institution that we use, and I know many others do the same way. We have like an auto enhanced formula on top of our formula that we used, and so an auto enhanced is actually going to tell us it's going to increase your score depending on what your previous experience was with your auto trade lines you had. So if you've had numerous previous auto trades and they've all been paid well, it's going to enhance your score significantly higher than what you might see on your Chase app or what you might see on one of the Bureau's apps, because we've added a benefit to say we want to make sure that we get our members the best rate possible and do it in a way that they've experienced themselves. So if you have great auto pay history, we want to give that benefit to you. And so it's definitely an enhancing score. So if you have like a credit score, like let's say you've got a 670 credit score that you visualize, it may be higher what we pull. So there's many different formulas. And there's a newer formula right now. It's called a Vantage score, and it's different from the standard FICO scores. And the Vantage is a trending score, where a FICO is a screenshot. So a FICO is a screenshot of what you are at that moment. So you could have had perfect credit history for the past 7 years, and then last month your auto pay stopped, you missed a payment, and your credit score just dropped by 60 points, where a FICO score is gonna basically say, oh, whoops, he's now having issues. We've just dropped him 60 points because he was late on this one trade, right? But if you're a Vantage formula, it's a trending. So it's not gonna screenshot you at that moment. It's gonna say, uh-oh, he's had problems, but he hasn't had problems in the past 36 months. So we're not gonna drop his score that heavily, right? And so every credit score is gonna differ no matter where you look at it. And there's nothing you can do about it. And that's why it's super important to actually pay attention to your score and have a few different models. If you've got your credit score through like a Chase app, or if you've got it through the Experian app or a Credit Karma app, those are all pulling from the same source, but they're pulling from using different formulas. Yes. The timing matters with credit cards. And we'll kind of get into that a little bit further, but I think I have myself set up on automatic payments because I know that I'm gonna make those payments automatically. And so I want my system to automatically do it. And typically I don't wait for the due dates. I set payments up with my payroll deduction. So if I'm paid every 2 weeks, then I'm not waiting. I have it automatically set up to go ahead and make that payment with my payroll, because therefore it's gone. I don't have to have it sitting in my checking account and waiting for the 26th to make that payment, right? And it's just gone, and it's a feel-good moment, right? But it does make a difference with credit cards, depending on the time it cycles and the time it does go. So we'll kind of go over that in a little bit for you.
So what's on your credit report? Personal information. So not only does it have your name, your date of birth, your social security number, and your address. So making sure that all of this is updated with the creditors that you have established credit with is important. So that way it makes your application process with a new lender a lot smoother. So if you have conflicting information, the credit report during a credit application could do like a fraud shield. And what that means is that there's conflicting information with the information that you're providing versus what is being reported to the bureaus with open trades that you already have.
Yeah. A second thing to note about your information on your credit report, it's there permanently. It's not going to change. So if you have applied for credit and I don't mean just credit, it could be a school loan. It could just be updating your school records. It could be updating your information with the DOL, all of these things, right? And so if you are living with your friend and you use that address and it's only a temporary address, that address is going to live on your credit bureau for the rest of your life. And it's important to know what is on there because there are security questions that are automatically generated through a third party that you will have to know for the rest of your life. So I still get sometimes, you had a loan back in 1996. Was it a $3,000 to $3,500? Was it $3,600 to $7,000? Or was it $8,000 to $10,000 loan? If I don't know that answer, then it's a mark on my it's a mark on me, and I might not be able to have that direct access at that moment for the security clearance. So it's super important to know what is on your credit and know that it will live on your credit and it will continue to ask you questions throughout your life.
An example of that is at one time I was paying my mom's cable bill, and I had some security questions that came up when I started cell phone service with a different company. And I knew my score was great and that all my credit profiles were unlocked. And I thought, man, I'm just going to go in there and I'm going to start this cell phone plan and I'm going to get my cell phone today. And I had it all planned out until the security question came up. And it gave me 5 different addresses. And it said, which one are you associated with? And I thought, none of these. And then later I had gone home because I obviously couldn't pass the security question. I had to answer all of them right. So then I had to fill out the application and wait for the few days for that to be reviewed in order for me to come back in and finish my process. But I had went and pulled one of my credit reports, had scrolled all the way to the end where it gives your information. I go, oh my goodness, that's right. I was paying her cable bill, and I had totally forgotten. It had been years since I had done that. So now I'll tell you what, I don't ever miss that question when it comes up. When I have verification questions, I'm absolutely ready to answer that one on 44th Street.
And you're going to come across this a lot with electronic signatures. One familiar one is DocuSign. So a lot of electronic signatures are gathered from DocuSign, and DocuSign does use precise ID, and this is where it triggers these questions. So anytime you're ever using like a DocuSign for electronic signature, it's going to come off questions. Those questions are not coming from the FI or whoever's sending you that document. They're coming directly from the bureau, and then whoever's working that or sending that aren't able to see your answers or see the questions. Those are just prevalent to you yourself to answer those security questions.
So credit accounts. You've established some credit, so now those are going to be reporting on your credit report. So what it's going to look at is the name of the lender, when it was established, when your last payment was, and what your payment is, and your limits as well. I don't remember if I said that or not. So that's important to keep on top of that as well. A good example of that is I had a JCPenney credit card since I was 18. And it's astonishing to me that they're still around, but here they are. And that's why I've held on to it, because I like that longevity of that trade. However, I had a $2,000 limit. I don't use that card anymore at all. I have to remind myself once a year to go in there and buy something from that store. But they recently dropped it down to $500 because they don't like it that I'm not shopping there anymore. So had I been watching that specific trade, but it's pretty far down there because it's pretty established and not much activity, I didn't realize they had dropped it down that low. So either I have to look at either retiring that card or picking up my shopping game. So, but we'll talk a little bit more about that later on too. There we go. Collection accounts. Has anybody talked to someone they know or a family member about collections? those are difficult. So what happens is you're going to get a billing statement from whether it's a utility company. Cell phones are notorious for that. Let's say you started a plan, made payment plans on this phone. You saw, oh, Verizon has a really good deal. I'm just going to slide on over there, but you still owed Sprint some payments on that phone. That could be a problem, right? You, in your mind, have broken up with Sprint, so you're not really concerned about the communication that's coming to you, or maybe you've moved and update that address, but they've sent you billing notices. You still owe us this amount of money to close out your account. Well, after a certain time, they report it to a collection agency. They'll charge it off and say, collection agency, we want you to collect on this, but then it also costs you money with the collection agency fees. And that sticks on your credit report. And so that is an adverse impact on your score, and something that creditors or lenders can see for 7 years. So that is something you want to be looking for. It does happen, life happens, but if you're monitoring your credit reports closely, you can see something come on there, and then you can address it right away, which you can start a dispute process or resolving that, but we'll talk about that a little bit more. But collection accounts is something definitely you want to watch out for and address immediately.
And I can't say it enough about collection accounts. If you're getting a letter from like a medical bill and it could just be a $25 copay, and then they're just sending you every 30 days, they're sending you a new statement saying, hey, you owe us the $25, you owe us the $25. They're going to sell that. And they do sell those to a third-party collection company. And then it's no longer owned by, like, let's just say Multicare, that healthcare provider. And so you can't then call up that provider and say, okay, I need to pay it now. They're going to tell you, they're going to refer you back to that collection company, and you're going to pay all those fees from there. And then even though they're paid, it's still going to be on there for 7 years. So, and it does definitely do a red flag and add some negative segments to your credit file.
I'm not sure that's entirely true though, because I had a $370 bill with Seattle Public Utilities, and I was being harassed by PMI Solutions, the debt collector, and I was able to just call Seattle City Light and pay it off correctly, and they were able to solutions to leave me alone.
Did they put you on hold? Yeah, did they put you on hold while they had to work with them? Because typically, once they sell it to a collection company, they own it, and then they've got to get permission from them to be able to take a settlement or take that funds. Because a lot of times they can still take the funds from you, but then they're taking those funds and they're paying that collection company. It might be behind the scenes, but because Seattle City Light, they're so big that they probably have a department that works with collections and works pretty closely with the collection company to be able to assist you. Because nobody wants to, if somebody calls me and wants to pay a bill, I don't want to say, I can't take your money. So I'm going to still try to work with you in towards that, to get that satisfied. But a lot of times it is owned by that company. And then even though you think that you gave Tacoma or Seattle City Light that cash, they're still paying, and they're only keeping a very small portion of those funds. And then they're paying the collection company off for that.
I had a similar situation with a medical office. So the great thing that you did is you received a collection notice and you addressed it right away. That's really good. And I had gone rounds with a collection agency as well saying, no, I don't owe this amount. I had insurance. And what actually happened is the medical office did not charge my insurance. They had stale insurance information because it was a referral. So I was able to provide that insurance information and get that resolved, and it was retracted. And sometimes cases like that, there may be them working together, like Janelle was talking about the accuracy of that reporting, or the accuracy of the amount owed even, or what that process was. But we'll be talking about that with the dispute a little bit further on in our presentation. So great, thank you for bringing that up. That is a very good point. Yes.
So let's say, well, I have family members who owe a lot of money.
Yeah.
Mm-hmm. How bad can it get? Like, let's say you owe money, and then like, let's say, how much percentage do they go up?
So it depends on the collection agency and the fees that they charge. So it's hard to say because there's, on your credit report, it will say delinquencies and it will also show like if it was charged off. And then it will stay on there for 7 years, which greatly impacts your ability to establish credit elsewhere. So
There is a statute of limitations on some of those collection accounts, but the collection companies have gotten pretty smart, and as soon as it comes up to the end of that statute of limitation, which I think is 10 years, they sell it to another collection company who then gets to own it for another 10 years. So there are ways for them to keep that negative trade alive by selling it off to another company. But there is statute of limitations.
public records.
A public record is a little bit different than a collection company. They are typically like maybe you owe taxes or you owe child support. Those are typically a public record. They report differently, and they report and stay on your credit for
Up to 10 years.
10 years for that? Okay, I was going to say, I don't know if that changed recently or not. There's been some changes.
COVID changed a lot of things with credit reporting, so it's important to look on some of these websites that will be giving you information about to look at what those are. And stay current on it because legislation can also change at any time as well. So again, knowledge is power. So I encourage you to educate yourself in the best way possible. So you've already done step 1 and showing up here today. So great job, everyone. Inquiries. So credit inquiries, if you're applying for a loan, that's going to report on your credit report. So whether it's you're out shopping for a car, then they're like, you have a really great score. And you're like, well, that's really great because maybe you weren't monitoring. You're like, that's really great news for me. And you're like, great score, you say. So I'm going to go ahead and accept that Capital One credit offer. We've submitted another application. So all these credit inquiries will show up on your credit report, and that is something that is viewed by lenders and calculated into your score calculation through the bureaus.
Absolutely. And kind of to follow up on inquiries, we get a lot of inquiries when we're shopping for cars. So you go to one car lot and then you're like, oh yeah, I'm interested in this. And then they kind of get you to sit down real quick and talk finance with them. And you may give them enough information and agree to have them pull credit. But then you don't actually buy the car. You drive down the road and you do the same thing at the next car lot. And same thing, next thing you know, you have 3 inquiries. Well, 3 inquiries could actually substantially reduce your credit score. So in one day, your score could actually be reduced and put you into a different tier, which actually affects your rates. So it's super important to not have your credit pulled unless you know exactly what you're doing. Did Vanessa mention that they stay on your credit report for 3 years? I'm not sure she did, but I want you to know that every inquiry will live on your credit for 3 years.
But do you know it stays on your credit report forever? That good trade. So make those payments on time because that is what's going to build your longevity and your history. And lenders do look at that. Like this person has had these types of loans. They paid well on them this entire time. We're more likely to extend a loan to them because they have good payment history. So that is exactly what you want showing on your credit report. Yes,
something good.
Something good.
You know, and something I always say, and I preach this a lot, is communication is a virtue. So if you are having troubles, talk to those creditors because there are plans available to help you. We have so many different plans. And not just, I kind of speak towards my financial institution, but when I speak of mine, I speak of many and all financial institutions and creditors. They have programs and plans available to assist you. And some of those are like skip-a-pays, right? So maybe you can't afford, you had an extra bill and you don't want to let that go to collections, right? And so you call up your financial institution and say, you know what, I had to pay this extra money over here. What can I do? Because now I'm having I think I might have troubles making my car payment this month, right? Well, there's skip-a-payment options where you're allowed to skip a payment on your auto loan a couple times a year. So communication is a virtue. You don't know what you don't know until you ask. So don't get behind the negative and stay in front of it. So if you think you're going to be late, talk to them. Yeah.
A lot of consumers will do this. So they are having financial hardship, and a lot of people will do things as far as not check their mail. They check their mail, but they don't open it. So it's like out of sight, out of mind. And I know that in a situation where finances are giving you a hard time, right? Because everything costs money. And you're thinking, I have established these obligations and I can't pay them now. And what is one thing that we do as like just humans is we practice avoidance. Especially in this, where it impacts you and a lot of the things that you do, including, again, we talked about your employment, your housing. This is something that you need to be brave on and open up that letter and take a look at it and address that with your creditors. Yes. So a lot of creditors will have plans. So whether it's a skip a pay, sometimes they'll do a modification on something because they want you to be able to pay them and resolve that debt. And what that means is you're going to have to be proactive, right? As soon as you see something changing in your life situation, communicate that. I'm not saying that you need to give them all of the details, but it would be worth you having that conversation to prevent that. So that, like in the case of like a modification for a loan, they might reduce your payment for X amount of time for you to just make less of a payment, but you're still satisfying that obligation, and it wouldn't report negatively to the bureaus.
Yeah.
But what happens is a snowball effect, right? Is you don't address it, and now one thing leans into another, and now you're in a situation. So it's very important I can't stress it enough, like speak with your creditors, see what options are out there. And especially since COVID happened, a lot of things changed for a lot of people. And I think that was, in a way, a good thing because it gave everyone a way to look at things a little bit more objectively, like how to help one another and to get through things when things are very hard.
Absolutely. We had a member actually come in one of our branches yesterday, and she literally walked in and says, I might have to bring my car. I might have to give my keys to you. And we were like, why? Your loan's good. We don't understand. What do you mean? And she's like, well, earlier this year, I went on Social Security disability and I'm no longer going to be working. So I went from $6,000 a month to $1,700 a month. And she had an $800 payment. And she said, I just don't know how I can make this work. So I just want to, and she's never had a late payment, and she had an over 800 credit score. And I just don't know how I'm going to make this work. And I'm like, well, how, you're going to need a car. You're going to need this car to get back and forth. Like, what are you going to do? We don't want to take this car from you. So let's see what you got in your value, and let's see if we can't reduce your payment. And we were able to reduce that and reduce her payment down to under $400. And that was just being proactive. And she didn't wait until she couldn't afford it, or she didn't wait until she got into that effect of like, the avoidance effect. So I was so grateful that she was able to come in, be transparent, and just kind of say what she was feeling and what she needed. And we were able to broaden our perspectives, look at our programs, and see what we can do for her. Thank you. It is. And I can't do that. I can't stress that enough about the communication is a virtue, because she communicated, and we were able to provide her with something that allowed her to keep her car and keep her credit and allowed her more funds in her pocket.
Obtaining your credit report. Well, we already talked about the apps with the credit bureaus, with your banking, with your credit card companies, Credit Karma. But you can also go to annualcreditreport.com and get your free annual credit report. You can get access to all 3 bureaus there. It's kind of like a neat little website so that you don't have to go all over the place. So you could do that right through online. You can also request it by mail. Or by telephone. You can go through that process there as well.
Yeah. This is the true source of your credit bureau. All of the 3 bureaus we talked about pull from this. And so this is your true source, but this isn't necessarily like the easiest route. The easiest route is using your financial institution's credit scoring model, or downloading the Credit Karma or Experian apps itself. If you were to use like the annualcreditreport.com, it's not going to give you a score. It's going to give you a report only. And so don't be alarmed if you do go on there. It's going to say you need to pay this fee to get that score with that as well. But you're not going to pay for any of that on a Credit Karma or Experian or the apps through your FIs.
So like Credit Karma, they do TransUnion and Equifax. They don't do Experian. But I bank with Sound Credit Union, so we do use Experian for that score, so I know all 3. So just use your resources that are probably available to you through credit monitoring services or through banking or credit card apps. I cannot stress that enough. Work smarter, not harder. Filing a dispute, so we talked about those collections, right? What is the process of that? So first, you're going to start with the creditor or the collection company. So let's say you get something from a collection company and you're like, I don't even know what this is for. So call that collection agency. They will be able to even provide you the information that they received on buying that debt, who the creditor is, what the original amount was, and their contact information, because they have to supply that information to you in order for you to be able to do a dispute if it is in fact something you do need to dispute. With the credit bureau, so let's say you've done your diligence, you've worked with the collection agency, you've worked with the original creditor, and you're like, no way, this is something that was resolved. You can then dispute with the credit bureaus. So you'll go directly to those credit bureaus to start their process. You can do the Federal Trade Commission. You can start your process there as well. So that is something that's a little bit nicely rounded for you to do that dispute process. Each bureau has a different process, so I encourage you. It's pretty easy to find on their websites. Usually it is just right under dispute. You can search their page for it because it is something that is common. And then if you still are not able to get a resolve and you still feel that it is not correct, that reporting, you can file a complaint with the Consumer Financial Protection Bureau. So something on your credit report to look for is identity theft. That is definitely out there right now. I work with a lot of our members who are experiencing identity theft or their accounts have been compromised. Unfortunately, that is the reality of today. Some things to look at are inquiries. So if you're looking on your credit report, we talked about those inquiries are going to be showing on there. If you look at an inquiry and you're like, when did that happen? So something like that might happen. Let's say if you're out going to a dealership and you see like 4 different lenders doing an inquiry, it might be that too. But it will give you the type of inquiry that is on there. So if you're like, I didn't apply for a credit card, please address that right away.
If you get a letter in the mail, an adverse action letter in the mail from a company, any company that says, hey, we declined you, and this is the reason we declined you, but yet you don't know anything about it, don't ignore that. That means somebody actually applied in your name. We have every day, we have online apps with fraudulent activities, and I know I'm gonna move away a little bit from credit reports, but every day we have fraudulent apps online, and they have your information, and they don't need much of your information to get it, and a lot of the information is public, and it is used through some channel. And so we like to try to decline those apps as fast as we can when we find the fraud, because it's mailing that adverse action to the real consumer, and then they're calling us and saying, hey, I didn't apply. And we're like, perfect, we knew you didn't, thank you for opening your mail, let's move forward and get this taken care of for you. Yes. Yeah, I can actually. So we had an online application come through, and it was for a chiropractor, and it was for a chiropractor, and it was a $25,000 unsecured loan request, and it was for moving, and it was a non-member. And so a non-member asking for the largest amount of unsecured money that our financial institution lends on is a red flag, right? Because they don't necessarily know our loans. They haven't spoke with any of our representatives in our branch. And so our online processors are looking for red flags and looking for identity theft. And so Kevin was processing this loan, and when he looked at it, he says, this just doesn't make sense. And he's like, she's a chiropractor, she makes this amount of money, she's got a great credit score. It's an instant approval. We could literally fund it right then and there. Everything was in line. Her score was high enough. We didn't need income verification or anything. So these fraudsters know what they're doing with their credit scores, and they know who they're targeting. A lot of times they're targeting people with public information. So she's a chiropractor. She had all of her practice was online. Her picture, her identity. They were able to go to the county assessor and obtain her home that she just bought a year ago. A lot of times when you buy a house, within that first year, a lot of that information is sold and gained because it's not like secured data, it's public data. And so they were able to obtain all of that information. Now, I don't know how they got her credit or her social security number, but they had an ID. They actually had a picture off of Facebook. And then they put and created a new ID and were able to supply us with a copy of her ID. And I worked with Kevin, our loan processor, and he didn't call the number that was present on the application. He went to the white pages, aka Google, and called the chiropractic office himself. And he says, hey, hey, Mrs. Smith, I just want to make sure that I got a credit application for you, and I just want to make sure it was you that actually intended to apply for this loan. And she says, no, I did not. And it all started from there. So it happens, and it happens to the best of us, but it just be very cautious in who you give your information to. Be very cautious on anybody that calls you and says, hey, you have a toll bill. Hey, you have a toll bill that needs to be paid, or I can lower your payments, but I need your Social Security to get into your account. So that's a lot of times how people are giving their information away, or they're spoofing. They're spoofing. It could look like it could be Sound Credit Union calling you, but it's not Sound Credit Union calling you. But Sound Credit Union is not going to call you and ask you for your Social Security number, your address, or anything like that. We already know who you are, and we have that information, so there's no need. We're going to ask you to verify, but verify a little bit different. So you're not giving up that personal information. So just be super careful about information you give people. And if you're uncomfortable, what I recommend every single time is to say, you know what, thanks for calling me. Let me give you a call back. And then you hang up, and then you call that company itself and say, okay, now I feel comfortable about doing this.
Yes. Credit bureaus? Did you freeze your reports?
Perfect. You put a freeze. 5 minutes. 5 minutes.
Leave it unlocked for 2 weeks if I did these credit cards, and then after that 2-week period expires.
Perfect.
That seems to be the best way, in my opinion, to stop things like that from happening.
It's absolutely one of the best ways you can do that. Now, it's not going to give you immediate credit if you don't know how to unfreeze it right away, right? So if you are applying and you wanted to apply for that store credit at TJ Maxx and your credit's frozen, you're not going to get instant credit. But, there's just different things. So it might stop you from getting instant credit, but it's protecting you in the long run.
If that does happen, please not only freeze your bureaus, but also file a report with the FTC as well. How credit scores are calculated. So credit score is a 3-digit number designed to reflect your credit risk and likelihood of repayment. So we looked at that with Diego and Angela. So we saw the differences on what the rates were, how much it actually costs for credit then. But let's give you the breakdown of what is all into that credit score. FICO, like we said, is Experian, which is that snapshot is the most widely used scoring model. So your credit score factors. First one is 35% is that payment history. We've talked a lot about that, right? Make those payments on time. Once that loan payment is past 30 days due, it's reported to the bureaus as delinquent. So make sure that you are budgeting and that you are setting reminders or automatic payments, whatever the case may be, to ensure that those payments are made consistently and on time. 30% is your amounts owed. So that is another thing that the credit bureaus look at. Are you acquiring a bunch of debt, and then are you using that like unsecured amounts? We will talk about those ratios here in just a moment. But if you have a lot of debt, and then if let's say something happens, like a pandemic, a loss of a job, something like that, now you are high risk because you have a lot of obligations and are not able to meet those requirements. 15% is the length of your credit history. So I was talking about my JCPenney card. I think it's about time for us to go our separate ways. But that's why I hung on for so long, because that is something that was special to me when I started establishing credit. But I have not opened a bunch of trades. I think the only things that I open up now are car loans, and that's it. And that's not very often because I'm not a car person. 10% is new credit. So as you're getting started out there and you're opening up all these different trades, whether it's a credit card or you do like a secure personal loan, something like that, as you're starting out, you're not going to see that high score because it's calculating that model and there's not really much to calculate off of. And then your credit mix. So when you're applying for a home loan, they're gonna talk to you about what your credit profile looks like. So that means that they're gonna be looking for versatility. Do you have auto loans? Do you have mortgage loans? Do you have unsecured debt? Do you have secured debt? Do you have like a good mix of that? So if you only have a bunch of credit cards or maybe one or two, there's not much to score off of, so that could impact your score as well. So these are the things you're going to want to consider when you're looking at your credit report. Just kind of look at those different trades, and again, it will tell you what type of trade it is.
Yep. A credit score can be as low as 350 and up to 850. I wanted to kind of share that with you too.
So when we're looking at the credit scores, how they're calculated, let's look at Diego. So Diego's credit card balance is $800. His limit is $1,000, but he pays every month the entire balance. So Angela, credit card balance is $5,000, and her limit is $10,000, so she's using about half, pays every month the minimum payment. Who do you think has the better score? How many say Diego?
That is incorrect. So Diego has used over his over limit, right? So how am I going to say this?
Hold on.
We're running out of time, so I'm trying to speed it up. So Diego has a $1,000 limit, but he's actually used over 75% of his limit, and so it's actually thrown a red flag and dropped his credit score. So Angela has a $10,000 limit. She's only used 50, so she's kind of in the yellow. She still has a lot of credit available. And even though she's only making her minimum payment and he pays it off, the way the credit calculates is how much you used. And so I always try to say use literally a third of your credit limit. So
the other thing with Diego is that he is paying off his entire balance. So if he pays off that entire balance, that's great. He doesn't pay interest, right? But the bad thing is that it doesn't report a balance to the bureaus at all. So that could negatively impact his reporting as well, because it looks like he's not using it, right? There's nothing to report on. Yes.
Absolutely. And we actually have programs available for people that don't have credit scores. We have first-time borrowers, and we have starter visas, and we also have secured loans available. So we have several options available for people to rebuild or build or create credit.
Speaking of building. So start by reviewing your financial situation and goals. So earlier I had mentioned budgeting. So look about like what you can afford a month. Be mindful of that when you're applying for loans. Ask what that rate is, the amount that you're requesting to borrow, and what would your monthly payment look like. So don't just go running into a loan and go, oh my gosh, now I have a $400 payment. I can only afford $250. So that might result in a refinance or inability to pay your loan. You might make it work for a little bit, but if your situation changes at all, you might not be able to make that payment.
Yeah, there was a question earlier that I wanted to kind of go back to, and it was about making that whole payment, and does it matter? And it does actually. So if you've paid off your whole credit balance prior to that cycle date of that Visa credit card, then it's not going to affect you, and it's actually going to give you a positive green go, even though you're paying that off, like Diego paid it off, right? But if you happen to have that full balance owing when that financial institution cycles that card, because we are required by law to cycle, generate, and issue a statement on credit cards. And so if you have a full balance, that's what's reflecting to the credit bureaus and reflecting a score. So it can benefit you by paying it off, but I would highly recommend know when your financial institution or your credit card company reports to the credit if you're doing something like that.
Yes.
You would do that through a financial institution. Absolutely. Absolutely.
We do debt consolidation all the time, and we encourage that actually. So if it's not something, if your initial loan request isn't something that we can approve, we'll look at different options for you, maybe even suggest a loan option that you didn't consider. But that's where you come to the professionals and those open lines of communication to find solutions.
Yeah, we've got lots of programs out there where you can, you would be surprised. Like we have a limit of $25,000 unsecured, so you may have more debt than the $25,000, right? So we can give you that loan up to $25,000, but we may say, hey, you have an auto loan that you've paid on for 48 months. Let's look at refinancing that and giving you a cash out option, and then being able to pay off the rest of your debt. So be transparent with your loan officers or whoever you're working with at any financial institution. Be transparent with them, because they're the ones that know what they're doing and they have the products available for you.
So
I would recommend doing the research first. I would always recommend that. Then at least you can shop around on websites of those financial institutions to see what their scores are. They'll post their rates. So you can kind of see where you might land. That's shopping for your rate. And the savvy consumer would do that. So it's great job. Those are really amazing questions. A lot of people don't ask that. They just go right in with the application, and now guess what? They have an inquiry. So if they're not shopping, like, you're kind of getting that inquiry on there, and it could impact your score.
The other option is doing a secured credit card or a secured loan, and that's using your own funds to secure that. So let's say like you get paid on Friday and you come in and you say, I need a $500 secured loan. And we're gonna give you a $500 secured loan. We're gonna hold that $500 of your money in your own account. You're still gonna earn interest on it. And then we're only gonna charge you maybe 3.25 or 305, a very minimal interest amount. And it's in a way to establish credit and rebuild credit. So yeah, it's a great idea. And it's a way to save money, and it's a way to make money as well. Because I know a lot of people that get into the secured loans to save money. Because they're like, I can't save money myself, so let me go ahead and drop my own money here. I'm going to not use this funds. As soon as I pay it off, I'm going to use the same funds, do another loan, and next thing you know, they've got a huge savings account, and they're addicted to these secured loans. Because it's their way of saving. We all have ways.
And if you can't do it by yourself, whatever, if it's a credit risk, a debt obligation, a cosigner. So if you have a trusted person that you wouldn't mind having credit with, and they don't mind having credit with you, that might be an option. We might counteroffer for that. Become an authorized user. Again, this is something where you are able to use the credit, but you're not obligated to pay. This is not something that the lenders will look at as your ability to pay. They understand what an authorized user is. However, that is reported to the bureaus, and it shows that can help you build your credit score, but that doesn't necessarily mean that you will be able to establish credit, because it's, again, you're not obligated to pay that debt. Yes.
No, I don't recommend dropping off it unless your mom's kicking you off of it, okay? Because that's an established store. You're actually gaining all of that. So you're getting a score from being an authorized signer, and you're getting, you have a trade line reporting, but you're not an established borrower. So I would recommend still applying for your own credit card, and what you're gonna get is you're gonna benefit by the rate. So you're gonna get your mom's credit scoring, or well, not your mom's, it's your own score, but it's a score generated off of that authorized card. I love that. And and once you have established credit or rebuild your credit, you're never going to have bad credit again. You're going to learn. You're here today. You're going to learn. You're going to pay attention to those things, and you're going to keep building your credit until you get that score. We don't get taught credit at home. There's not a lot of people that are actually taught credit. And so that's why we're out here, and we want to be able to share these ideas and these ideas for you to be able to establish credit or rebuild credit, because it is that important, and it affects our life at a daily.
So again, we talked about myths. Closing my credit card will hurt my score. In my case, I have established credit, so I'm fine with closing my JCPenney card. I'll be all right. But if that was the only card I had and I only had it open for like 6 months, I might want to reconsider that, right? Because I don't have that history. We talked about what goes into your credit score and how those contributing factors impact that. Okay. So we are out of time, unfortunately, but this is the end of our presentation. Looks like you did get that handout. That information is there for you. This also will be available on recording. So thank you so much for your time today. Thank you very much for all those great contributions that you had. That is really great. It's really good to hear that people are interested in this and that they're enthusiastic about learning. We just really appreciate your time today and willingness to hear this, and I hope that it's benefit you in some way.